GM, it is Monday, the 20th of October. New York session starts in 12 minutes. So, weekly close, what did we see? Bitcoin did not confirm a market structure break, so far so good. We did close below the high time frame support resistance level, and we did close below the weekly 12 and 21 EMA bands, first time since March. So, those two sides of it, not the best for bulls, but at least we didn't confirm a market structure break like we did back in 2021 around the cycle top. So I do think we're going to see a bounce this week. That was what I mentioned in the weekly outlook video last night and what I've been saying for the past couple days. Even in the bearish scenario and of course the bullish scenario, Bitcoin is more likely to go higher this week. At least that's where your best risk to reward is going to be on longs. And that's the case until you lose the 107.2k range low level. Lose that on a daily close, then we can talk about breakdown again. But since we reclaimed it, that was a failed breakdown. The VIX signal failed and it went back below the danger level. So all the signs are pointing towards a bounce. So you got this Wyckoff schematic on the left and right. On the left, you have a distribution idea, and on the right, you have a reaccumulation idea. And I talked about this in my post here. So you've got an interesting scenario developing where distribution is actually more likely if we see a sharp rally from here. And let me explain why. Retail has been wrecked, guys. There's billions and billions of dollars lost from the stocks like Metaplanet, all of those Sailor copycats, billions lost in the altcoin market from that liquidation event, which was mostly caused by Binance and market makers having to pull liquidity, as we know. So without some sort of reaccumulation, which is where we know smart money does the buying. Look, guys, these Wyckoff schematics are no joke on the high time frame. All of these green boxes, these are clear Wyckoff accumulation patterns. All the red boxes, they are clear Wyckoff distribution patterns. Look, they have that horrible sweep. Again, you got the sweep, leads to downside, leads to the flushes, and in this case, led to the biggest liquidation in crypto history. I read reports that it was 5 times bigger than the FTX crash. Now, of course, Bitcoin and the majors held up pretty well. It was more so the altcoins that got wrecked. So now we need to see, well, is this distribution? So far, all the signs are showing that it's more likely to be, but at the same time, got to be open to all scenarios as a trader. You're never fixed in a bias. That way, you're never surprised by the market and you can prepare for all scenarios because we just need the markets to go up or down and we can make money. We don't care if it's the top. We don't care if it's the bottom. All of that is just irrelevant. So either way, scenario was pointing towards a bounce this week, and we've seen that already early on. So that's playing out pretty beautifully. Whether we get the green or whether we get the red or orange path, I'm not sure. But distribution, if you get a sharp rally, sharp squeeze, it's more likely to be bearish because then you're just blowing out shorts. You're inducing the retail, what's left of them, to FOMO long, and that generates additional exit liquidity for smart money. And if they're generating exit liquidity, that is indicative of distribution. Whereas reaccumulation is more likely if we move sideways with low volatility and build a base. Because if retail are wrecked and demand for Bitcoin remains high up here, so outweighing the supply and all those big dormant wallets that we know have been selling, then smart money should begin reaccumulating. And that means quiet sideways action for 1 to 2 months, which we know balls retail out and builds a base for a sustainable rally rather than generating exit liquidity. I think that's less likely, but that's what you actually want to see here as a bull. If we get a fresh chart up on Bitcoin, let's use this. Of course, terrible chart. Let's use this. A reaccumulation would look something like this, where Bitcoin goes sideways for a number of months before building a base for higher. You have attempts at the lows repeatedly, which fail, which shows that sellers are exhausted, and that is indicative of reaccumulation. It's that sideways period which bores retail out. It's not generating exit liquidity. It's not massive pumps up through the range that are highly volatile. It's instead getting choppy, smart money quietly buying, and that can build the base for higher and a more sustainable rally. Because at the moment, what you're seeing is volatility increasing. You've got this big megaphone sort of pattern, which shows volatility is getting wider and wider and wider, which is, again, more indicative of exit liquidity generation. So at the moment, if we see a big sharp squeeze, it's more likely to then roll over and you start to see this just round out. So you get a rounded top formation. However, if we can just go sideways, reaccumulate. So actually going down / sideways is the more bullish path, and going straight up is the more bearish path in this scenario. Because we have a very unique scenario where retail have been wrecked. And after they're wrecked, you need reaccumulation. If you don't get it, it's just more exit liquidity game. So that's what I'm looking at in terms of these Wyckoff schematics. Main takeaway point for this week was both schematics point for higher. And that is the beautiful reversal that we are seeing already. So when we look at Bitcoin, what are we seeing? Well, low time frame levels, we reclaimed the range low, pumped up. We then had a flush on the daily open back towards that range low. Beautiful setup. Absolutely gutted, because what was this? Well, this was trade of the week. It just happened on a shorter time frame, so it was more like this, where we beautifully came down to the range low. Just as I said in this short squeeze scenario, if the range low holds on dips, that is the trigger to get long. And we even front run that level, which allows you to potentially get on board if your systems allow. And that was the trade setup that I shared with you guys on the weekly outlook video. Of course, I was sleeping, so missed that trade. Mr. Market's not been very friendly recently. Bunch of setups playing when I'm asleep, but what can you do? Hey guys, that's trading. So that has played out pretty beautifully. Again, weekly outlook video is live right now, going on a real macro deep dive. Tons of alpha in that. Make sure to check it out. It's been live for 15 hours now. Really, really action packed. And that trade setup is now playing out here, since you got that dip towards the range low right off the daily open, which is just perfect. And then a push up above the high time frame SR. So from here, what am I looking at? Well, go to this chart over here. You've got this double impulse candle, which is also around that high time frame SR level, where I'd expect Bitcoin to hold this on any dip. So if we can come down like this, flush out some longs, and you see this overall gap between 108.9 and 109.9K hold, then that can set up for some longs for a push higher, and that would be building that higher low structure. So this would be the fast trend idea for continuation to still get on board on a potential rally here. Now, of course, if we lose that level, then you're probably looking at the same thing, just from the range low instead, as your alternative scenario. So I'd be looking at one of those two paths to potentially look for long setups. If I see the triggers I'm looking for in my systems around these zones, I think this gap holds. That's going to lead to a strong move. Lose this gap, then you're probably heading to the range low for another test before potentially we bottom out here, flip this range low level again into support, confirm it, and that can lead to a move higher. So that's what I'm looking at on BTC. Now, of course, if we do just continue higher from here, that's great. Maybe you get a scenario like this where we keep pushing before a flush into that gap. And again, I'll be looking, does this hold? Can that set up for potential longs? Because when we look at the order flow analysis on Bitcoin, what are we seeing? Well, again, here are the exact same levels. You've got 112K, which has been Really nice support resistance level over and over, and for a long time now, it's been a very nice support resistance level that I've shared with you guys. So that's the level on the upside to flip for continuation higher to then the Q4 open. Flip that, and you're looking at the liquidity around 116K as your upside targets. And below, again, you've got that 110K high time frame SR and this impulse candle gap, which is formed here. But what are we seeing data-wise? Well, if we look at the open interest, since this morning, open interest is up 1.4% and price is up, let's see, price is up 1.8%. So not too much signs of over leverage here. So could be a nice steal if you get a dip into this box on the New York Open for some decent long setups. Wouldn't be looking to get long at the highs here as we head into resistance. So got a nice gap up. This impulse candle should hold if strong. Lose that, then simply just looking at the range low instead for an extended bottoming formation pattern. So GM to any of you that caught, of course, the beautiful trade setup from Trade of the Week in last night's video. Range low, slightly got front run, but still it held, couldn't push below it off that daily open, and then we rallied higher. So reversal is so far in play as mentioned. Bitcoin most likely was going to bounce, whether it's going to be distribution or accumulation, doesn't matter. That was the high risk reward setups. And again, to be perfectly clear, lose the range low on a daily close basis, then sure, we're looking at potential breakdown again. While the dailies are closing below the range low, bias is that bears are in control. But while we're above it, bulls have a shot at a bounce here or potential reaccumulation. So that's what I'm looking at in terms of Bitcoin. Now, when we move on to Ethereum, it's really not that interesting. So we're seeing Ethereum is much weaker than Bitcoin for today. Let's see if that changes in the New York session. I don't think it will, but look, it reclaimed the range low. That's great, but Ethereum's below its high time frame SR level at 4.1K, whereas Bitcoin is above its high time frame SR level. If you look at this chart over here, all of the high time frame SR levels, you can see this clearly. Bitcoin above, ETH below, total free, your altcoins below, and others, your altcoins outside the top 10, below. So I've got no real interest in trading your altcoins, which a lot of them, their liquidity's just been zapped. So it's not a nice environment to trade a coin where the liquidity's been absolutely destroyed through that liquidation wick, because there's less of a reason to bid it. After a liquidation, the first assets people sell are the high risk ones, and that leaves Bitcoin as being the lowest risk one, which is why we see Bitcoin's above its high time frame SR and nothing else is. So that's why Bitcoin's of most interest today, not really looking at ETH. And one last thing to touch on Bitcoin, looked at these levels in last night's weekly outlook video. So you got the volume analysis of where majority of Bitcoin was sold, and it's below that 112.5K. So confirming that as a real support resistance level. Get above there and you can start squeezing and making them rethink their sells on Bitcoin. 117K is where the bulk of the Bitcoin selling begun, below here. So get to there and you're looking at above there, potential strength in this move. Below there, that can hold as resistance. And then of course you got 120.6K where smart money sold at the beginning. Make sure to check out that video again, action packed. If you enjoyed it, drop a subscribe, turn that bell on if you like this content. But you can see you've got this big volume over here. This is where smart money sold, below 120.6K. Then your next chunk of volume is 117K. And then your big volume where majority of the Bitcoin selling on this liquidation day was 112.5K. So interesting level to flip, something I'm also going to keep my eye on as potential target levels in any long setups that I do manage to take. So that's the full update today. Going to take a quick look at the macro markets because they are very interesting lately. Gold, it just keeps pushing higher. This is why I say you've got to wait for a price action trigger to call a top on this chart. Despite all the signals around retail going crazy and all the gold shops around the world and they're running out of gold to sell. Yes, it's all the top signals, but until price confirms it, expect this chart to continue higher, and you've now got a low here where gold is going to trade between the low and high of this candle. So get a box here from the Friday trading day, and this is what you want to trade around on gold low time frame. So break above this box, and potentially you can look at momentum higher. So that can look like this. Get above here, you can look at higher. Below here, you're looking at a further correction and bearishness. And maybe that correction can be bullish for Bitcoin and allow Bitcoin to have a bit of a sympathy rally against gold, as it can actually have some flows and some attention instead of gold getting it all. But at the moment, H1, 12 and 21 bands are green. So bias would be for upside. Let's see how gold trades today within this box over here between really 4.2 and the all-time high at 4.4K. Which side breaks first? And when it comes to stocks, it's a similar picture. So stocks, you just want to take a super simple view. They are ranging right now. So take this high to the low, and let's see how stocks consolidate. Can they consolidate at the upper end of this box and base out for a breakout, or do they come back to the lows and potentially go for a breakdown? And then you're looking for which side of the range breaks between the 0 and the 1 for either continuation higher or a breakdown lower. But so far, stocks didn't break down. The low that I've been mentioning stayed intact. So seems like markets could potentially be risk on. And even if they are risk off, tops, as you know, they take time to form. Got a big red day here, but look how long it took before S&P actually had that big tariff crash. It took 50 days, so almost 2 months before it actually lost the low and started breaking down. So if you look at the S&P here, let's imagine it takes 50 days again. We can go sideways, we can go higher, and we can not break down for another 2 months. And it can just be choppy, remaining range bound before an eventual breakdown. And of course, bullish scenario, we're just going to make new highs as we have been on every daily flush. So that's what you're looking at in terms of stocks. You're really just in a range here, and you want to see, is this just forming a big distribution, or can we continue that daily trend and make new highs? So weekly chart, so far so good. It's just the lower time frames that are urging caution. But on the weekly, take it for what it is. This chart is going higher and building new highs. So again, you can also do this on stocks, where you just take this box over here and you say, which way is it going to break from this box to the upside or to the downside? So that's what I'll be looking at in terms of the S&P. What way breaks first? Is it the all-time high at 6.8K, or is it 6.5K, the low it's set on that dump? Now that's the full market update. Again, enjoyed this video, smash a like, smash a comment, subscribe, help support this channel, because I've got big things coming and a lot of things I really want to do to help you guys become the best traders possible. That's why I do this. So GM to you all. Hope you enjoyed trading today.